Welcome to FinTech Matrix, where tech meets money and trends become power. You heard it here first. Today, July 27th, 2025, we're examining what's driving your financial world and reshaping technology across the globe. First, we break down new turbulence in U.S. markets, consumer spending, and a Federal Reserve pause. The UK stagflation fears deepen as consumer confidence dips and retail sales soften. And globally, the ECB holds rates steady while crypto volatility returns amid a historic Bitcoin sale. Next, we explore Microsoft's sweeping AI pivot and job cuts, Intel's largest layoff plan in over a decade, China's bold proposal for a new global AI body, and Google's surging Gemini platform. Finally, actionable insights on what to watch as August begins. So grab a cup of coffee, settle in, and let's unpack what matters to your wallet and your world over the last 48 hours, here on FinTech Matrix. Let's start with what's moving the markets today. Here's your finance update. United States finance, markets and consumer pulse. Wall Street saw mixed momentum on Friday, July 26th. The Dow Jones slipped 0.3%, while the S&P 500 and Nasdaq Composite edged higher, closing at fresh record highs. Markets digested strong corporate earnings, but signs of consumer fatigue emerged. Consumer spending in June rose just 0.2%, below estimates. Real disposable income fell for a second straight month, putting pressure on household budgets amid persistent core inflation. Federal Reserve officials continued their hawkish tone. Governor Michelle Bowman reiterated the need to keep rates high for some time, citing core inflation's slow descent. Markets now expect the Fed to delay cuts until Q4 2025. Banks and credit conditions. Credit card delinquency rates reached 4.2%, their highest since 2009, led by Gen Z and millennial borrowers. Regional banks such as Fifth Third Ohio and Zions Bank Utah raised loss reserves, citing rising default expectations. Meanwhile, Goldman Sachs, New York, launched an internal review of its consumer division after continued losses from its markets platform. Analysts expect strategic changes or a potential spin-off in Q1 2026. United Kingdom finance. Stagflation risks mount. The UK is showing signs of economic stagnation as high inflation meets weakening demand. Retail sales fell 0.5% in June, led by department store and food sectors. Meanwhile, GfK consumer confidence dipped 3 points, citing household cost pressure. The Bank of England remains cautious ahead of its August meeting. Governor Andrew Bailey stated that rate cuts remain premature despite inflation easing to 3.2%. Markets expect the BOE to hold at 5.25% into September. Housing and lending. Mortgage approvals fell for the fourth consecutive month, while average UK house prices dropped 1.1% year-on-year, the steepest decline since 2012. Barclays and Nationwide are tightening lending standards for first-time buyers. Global finance. ECB holds, markets pause. On July 25th, the European Central Bank, Frankfurt, held interest rates steady at 2%, signaling a continued hawkish stance as Eurozone inflation remains sticky. German bond yields rose, while the EU Stoxx 600 index fell 0.5%. Emerging markets. India reported record inward remittances of $132 billion for fiscal year 2025, helping shore up the rupee. Brazil's central bank warned of renewed inflation risks due to oil price volatility, hinting at a potential pause in rate cuts. South Korea will host trade negotiations with the U.S. next week amid growing chip export tensions with China. De-dollarization talk returns. A new academic paper published July 26th warns of accelerating financial fragmentation globally. Central banks are actively exploring CBDCs, gold-backed assets, and alternative networks to SWIFT as geopolitical tensions persist. Crypto markets. Bitcoin volatility returns. Bitcoin dropped 2.4% over the last 48 hours to trade near $117,000, down from its July peak of $123,000. The fall followed a $9 billion BTC liquidation by Galaxy Digital USA, one of the largest institutional crypto movements in 2025. Options expiration impact. July 25th saw the expiration of $12.3 billion in Bitcoin options and $2.7 billion in Ethereum options, creating short-term volatility across DeFi platforms. Ethereum's RSI briefly dipped to 6 out of 100, triggering automated buy signals. Regulatory update. The SEC US is now reviewing 7 new Ethereum ETF proposals, while the UK FCA has reopened discussions on classifying NFTs and stablecoins under revised MiCA-aligned rules, expected by year-end. Finance segment wrap-up. Bottom line, the global economy is navigating a tightrope, with central banks delaying relief, consumer spending softening, and crypto facing renewed headwinds. Eyes are now on labor market reports and trade summits as we head into August. Now, let's move to the innovation front. Here is your tech update. United States tech. Microsoft's AI pivot and layoffs. On July 26th, Microsoft, Washington, announced the layoff of 9,000 employees, bringing its 2025 total cuts to over 15,000. Roles impacted include infrastructure, marketing, and sales, part of CEO Satya Nadella's AI-first strategy. Despite internal backlash and morale issues, Microsoft reaffirmed bullish AI earnings guidance ahead of its July 30th town hall and Q3 earnings release. Intel's massive workforce reduction. Intel California will cut 25,000 jobs by Q4 2025, the largest tech layoff this year. New CEO Lip-Bu Tan is enforcing a strict return-to-office policy, halting overseas fabs, and narrowing product focus to server-grade AI chips. Google surges in AI adoption. Google, California, reported a 50% increase in daily AI prompts across its Gemini platform. Its AI-powered search results are now used in over 35% of global queries. Gemini app usage topped 450 million monthly active users in July. United Kingdom tech. UK tech sector lags AI race. Despite strong investment pledges, British firms remain underweight in AI adoption. ARM Holdings Cambridge is facing pressure from investors over weak AI licensing revenue, while Revolut announced an AI audit platform set to launch in Q4. BT Group London will roll out 5G-powered AI operations in its core network, an initiative backed by the UK Department for Science, Innovation and Technology (DSIT). However, tech employment remains flat year-on-year. Global tech. China proposes global AI coalition. At the Shanghai AI conference on July 26, China proposed a new global AI cooperation body, headquartered in Shanghai. The initiative, endorsed by Premier Li Qiang, aims to rival US-led frameworks and promote equitable AI access. Layoffs across global tech. IBM, US, SAP, Germany, and Tata Consultancy, India, also announced layoffs this week, citing AI redundancies. Over 94,000 tech jobs have been eliminated globally in 2025, with over 40% tied to AI-led restructuring. Meta, Tesla, and indeed all disclosed team reorgs focused on downsizing legacy operations. Tech segment wrap-up. Bottom line, big tech is embracing AI, and that wraps up your FinTech Matrix update for today. Here's what we covered. In finance, the Fed remains cautious, the UK flirts with stagflation, the ECB stands pat, and crypto faces liquidation-led turbulence. In tech, Microsoft and Intel lead global layoffs in a pivot to AI. China launches its own AI global vision, and Google is winning the usage war. One thing's clear, the future of finance and technology isn't just adapting, it's accelerating across borders, policies, and platforms. Whether you're watching valuations or exploring blockchain integration, staying informed is your edge. If today's deep dive helped you make sense of the shifts, don't forget to like, share, and subscribe. And hit the bell so you never miss what moves the market. Drop a comment below. Do you think big tech is moving too fast in replacing jobs with AI? Or is this the evolution we've been expecting? This is FinTech Matrix, delivering money, tech, and trends to your doorstep. Stay ahead. Stay informed. Keep watching FinTech Matrix. Thanks for watching.